Hello everyone, and I hope that you are doing well. So welcome back to another breakdown. So this is a breakdown of the Euro USD short that I took. Was it yesterday? Gosh, I feel like time's moving quick. Yeah, so this is a short that I took yesterday morning. Again, this is the live testing of the disruption model, and obviously I got asked this earlier today. So because I'm live testing the disruption model, I'm not actively trading the inception model. It's not possible for me to do that anyway, to be honest. So yeah, so you won't see any videos with the inception model for the next month. So for the month of August, no, not for the disruption model, for the inception model. Sorry, I don't know if I said that. But yeah, anyway, for the month of August, I'm going to be purely live testing the disruption model, and then depending on the result of this month, I will either continue it going forward, or I will scrap the idea completely. But at least it's giving you some insight about how how I go about developing model, and I appreciate the feedback so far from the previous videos. And I'm glad that it's inspiring some of you guys to start testing your own models, which is what you guys should be doing anyway, to be honest. But I'm glad that these videos are giving you an insight as to how I personally think, and how how Vertex was essentially created. It's all about trial and error, really. Right. So the difference between this trade was I wanted to see what it's like trading disruption from a POI directly. I did do so obviously from the back test that I've done. I think there was only one scenario from what I remember where I traded off the POI directly, but that one scenario does not it was a winner, but it didn't represent obviously how price actually reacts to this, because coming into this thinking about the 1 minute POI, trading off a confirmation straight off the 1 second is quite scary, purely because I mean the size of the POI. I mean it's not a huge POI, to be fair. Yeah, I mean it's a 3 pip POI, but going off the 1 second is quite scary. But the confidence comes from the fact that we are hoping that the first initial move fails, right? Which is where we would have entered using our normal confirmation model, but because we're waiting for the disruption before we enter, I'm hoping that that gives us enough confluence to trade it comfortably on the 1 second. Now, why I've chosen the 1 second is purely because I'm comfortable trading the 1 second. Otherwise, I'll be using another time frame. I'm comfortable executing quick enough to do it, and to be honest, it's easier trading the disruption model, far easier, I would say, than the inception model, because I'm less stressed in terms of how I execute with this, because I'm not having to flick to so many different time frames. It's just literally you have your base time frame and then you have your confirmation. That's literally it. But in terms of our structural rules remain the same in terms of, say for example, this. So we have our prices coming into the POI. We have our first move. This now fails, so we have our disruption, and then we're going to look to enter. So we're going to look to enter at either here, right? Or we're going to look to enter at either here, right? At the next POI to continue. And that obviously holds more value in terms of the two rules concept, and in terms of order flow, if there is any. However, obviously, if you miss these moves, or say for example, if price, so it violates, taking that out. Say if price doesn't retrace back to that, we have two POIs and price didn't retrace. We still have to use our structural rules and still go up the time frame. So we'll go from the 1 second to the 5 second, and it'll be easier this way purely because it won't make a difference, and it won't make a difference in terms of, because when we're incepted, for example, say that I'm going to incept here, I need to be wary and conscious of the fact that it cannot break this low, because if it breaks this low, then it invalidates the inception, and then I can't take the trade anymore, and then I have to go back to the 5 second, watch for that structural break, and then look for the new range. And I don't know if you can hear that. I don't know what happened to Chloe. Hold on, bear with me. Chloe? What? Did he come inside? You're such a drama queen. You know what? The recording caught all that, and I'm not going to edit that out. Sorry, guys. Basically, the balcony door was open, and she's very scared of birds. So, and a pigeon apparently flew in, so she screamed. I don't know if you guys heard the scream. I hope you did, because that was quite funny. But she's fine. I'm not going to edit that out. I'll leave that in. What was I talking about? Oh gosh. What was I talking about? Yeah. In terms of inception, right? Because you have to be consciously aware of it. You're going to be cute. You're going to flick from the 5 second, then the 1 second, then the 10 second, and then 1 second. You're going to keep flicking through because you always have to be conscious of the structural invalidation points, right? But if you're going for confirmation directly, right? So we'll go the 1 second confirmation. We just move up the time frame. We don't have to keep going flicking between the two, because that process of going up the time frame allows us to stay in a valid range, and we're only confirming, so we're going to do the exact same thing. However, what I would do in the case, whoa, how can we select that then? Okay, what I'll do in the case that, say, price comes into the POI, and then we have our disruption, price takes it out, creates a new low, and then say that this happens, for example. So we have our two rules. Say that we missed that entry, price didn't come back to this one, price goes on to violate. What are we going to do? So I didn't mean to do that. I meant if price does this, so we have a further break, so we need to move up the time frame. But if price does this, for example, and goes out and takes out that high, again, the same structure rules. There's a video on this on the FAQ section, by the way, of when to go up time frames and when to go down time frames. If price was to violate, right, we wouldn't go up, we'll go back to that. So for me, I'll start from the 1 second here, then if it breaks that structure, I'll go to the 5 second. But if it ends up breaking structure back up, I'll go back to the 1 second and look for that confirmation again. That's my personal understanding, and that's my personal rule set, which is the exact same rule set. It's no different from what we teach in the course. It's, nothing is new. It's just the same rules. The only difference is how it's executed, right? Anyway, so in terms of this trade, so as I mentioned, we're going to go straight off the POI. Now, why did I go off the 1 minute? So obviously I start off using the 15 second. But in terms of this 15 second from when price started, the range was quite long. It was quite large. I mean, the range was from here. I forgot if that was a rate. Yeah, that's the high there. The range was quite high, so I had to wait a while. So because this was the immediate thing that I saw, I went and had a look at the 1 minute at that point to see what was going on. Now, in terms of the 1 minute, we just had this move. That was it. So there was nothing really for me to trade. But obviously, for me, I flick between the 15, 30, and 1 minute, right? That's my general rule set. So, but what happened in terms of the 15 seconds? So this was the 1 minute low when price continued to break, and then it broke here again. When we took out the structural high, which this has slightly changed a little bit. When we took out the structural high, I want to look for that confirmation. But price never retraced, and price continued to break through, and it ended up going to that. It ended up going to the IMOB of that initial break of structure. But I went to the 1 minute just to see what POI that it was in. So in terms of disruption of the base time frame, technically you can class this as a disruption on that lower time frame, and thing is, it will still count in terms of because what we have is we've got this. That's why. Sorry, we've got this break of structure which goes on to form this range, and then we've got the next break of structure, and then we got, where's the high? Yeah, there we go. I'm pretty sure the high was here from what. Oh, it is there. There we go. But then what happened was when price violated and went and started heading to the IMOB, this counts as that disruption. But I wanted to make sure that it still made sense, because I was still looking for a potential long if price was to violate that as well. I'm not sure at the moment if we need to wait for a disruption of the base time frame purely because of this understanding of this scenario, because this 1 minute POI, right, what's happened here, we can argue that there was a disruption on the 15 second and there was a disruption on the 30 second. So for me personally, I still don't think, I'm not sure whether I need to incorporate a rule set of the base time frame needing to have a disruption. But I can't decipher whether this disruption is the reason why these trades are working out. Because looking back at the losses, there was still disruption, and there was I can't remember how losses there were, but looking back at the losses, there was still disruption in place. So I don't know if these are just valid losses, or what. That's what I'm still trying to decide. And given the conversations I have had with some of you, I'm still trying to decide that. So I'm not overly sure. But again, this month of live testing would give me a better idea. And the reason why we're trading live as well and testing this live is purely because I want to see what it feels like psychologically to take these trades, or whether I am confident. I mean, generally I'm confident when I'm executing anyway, but I want to make sure that I don't really have much doubt when I'm trading. I want to make sure that I want to make note of my experience when I'm executing, in terms of, am I comfortable, am I stressed, am I sweating, am I overthinking a situation, and so on. I need to incorporate that all into the rule set, not into the rule set, into the decision making, in terms of identifying whether this model is ideal or not. I know I'm speaking quite a lot. I want to make sure that I am getting across all my thoughts and feelings about developing this model and how I'm going about perfecting this. Basically, I want to try and give you my whole thinking, basically, which I hope I'm doing to a certain extent. Anyway, so the general thing is, once price actually came into that POI, I did not mean to do that. So this was still that 15 second POI, and there's also that 1 minute POI. So we had that confluence there. Once price came in, so exactly the same as last time. Right. So we have, I can't remember if this structure has changed. It looks pretty much the same. Okay, so we have a structural high, structural low. We have a breaker structure, which goes on to form this low here, and then we have a high and a low. So then we have our two rules. We are following that. We have a disruption which caused the high, and now we are going to be looking for our entry. So the first two rules have now been disrupted, and now we're going to look for our entry confirmation. What we have is the first break. So we have rule number 1, then we have rule number 2. Now rule number 2 is where I took the first entry. Obviously this was entered slightly late, I would say, in terms of execution. This happened so quick, but I took the loss on that one, so that was a -1. Then following that, I had an entry placed at the IM. I had so much time to place this order. Price never came back, and then what happened? Price decided to break. Now I didn't move up the time frame purely because I didn't need to, because we had that SR disruption, so this was taken out. So this is essentially disruption of disruption, which I'm not sure if how effective this will be in the long run. This was the first trade that has happened, so I'm not sure how effective this would be, but hopefully through continual testing we'll get an idea of whether this works or not, because this could be sort of considered as this inception disruption. I suppose. Anyway, we had that next break, and obviously I just placed the entry of this one, and it was a 0.5 pip stop on this, and this was a manual execution. Oh no, this was a limit order actually. Yeah, this was a limit order. If you're going to do a limit order, what I would say is, because I remember it flashed red and the spread was so close. I remember watching this actually. Spread was so close to taking me out. If you're going to do a limit order, make sure you add a bit more because of how the brokers react. I mean, the spread was 0 at the time, but it fluctuates obviously so much. It was fluctuating between 0 and 0.1 or 2 pips, so you have to be careful with that one. And I'm just lucky that price reacted where it did, because I think if it went a pipette higher, it would have taken me out. purely from spread. So that was a limit order, and again I had plenty of time within that phase. But once that was taken, obviously I went through in my usual target taking procedures. So I went to the hourly first, but price already took out the hourly low at this point. It moved so quick, and then when I was looking at the hourly, I saw that we had this 4-hour POI marked. So the only logical thing that I can think about is for price to come to this, and then I'll monitor reaction to see if I need to close or not. But because it got quite late in the day, I ended up closing the trade because I knew that I'll be busy the following morning, which was today morning, and I knew that I didn't really want to look what's happening in the evening once price got into it. So just before 5 o'clock, I closed the trade. So overall the analysis was like 139R, but I closed 50 something with partials obviously. But now obviously price took out that low, which would have been my ideal target, to be fair, to take out that low. That would have been a 1 to 200, but obviously not. It wouldn't have been in terms of with partials or so. But yeah, I mean that's a great move, and this is a good example of showing you that even though we still have a POI, we don't always need to wait. We can trade towards the POI and still hold a little bit with the potential that price can break through. Because now that it's broken through, well, it's not fully broken yet, but now that this is going to break through, if it does close below, we can now continue the short. Now, if that's the case, if price continues here, if we had kept our entry, where's my entry gone? Why is my entry not showing? It was somewhere here. There it is. For example, if I was to keep my swing position here, I've entered before this short has even happened, before this was all given out, because we were still following this bullish order flow, so there was no reason really to go short in terms of the high time frame perspective. But this is a good example of showing you the fractal nature of the market, of how we can still play price on the lower time frames and still trade the higher time frame intention. But the intention with this one was that we had our reason why we did the trade, because we're trading to this 4-hour POI and then going to monitor the reaction. And if price does break through, then we potentially have a great swing on our hands. And to be honest, that's how I've caught my biggest swing, is from a counter trend trade. But again, there's this counter trend on the higher time frame, but on that lower time frame, I was following the flow and I was pro trend on that lower time frame. So I was happy to continue what I was doing, but in terms of counter trend trading, this was a massive counter trend on the higher time frame, but it had enough reason and logic behind it. And the only way you get confidence from doing it is from observing and executing over and over and over again, to the point where you end up executing without even thinking, as in you've got no doubt behind anything that you're doing, because you know that you've got a working edge and you understand and you trust the system. That's the main thing. If you have too much doubt, you're not going to trust it at all. So yeah, so this trade obviously, this trade obviously I took a loss and then I took a win. So it's a fairly standard move, I would suppose. So far the live testing of the disruption model is going well. But obviously it's not because I didn't trade Monday and I didn't trade today. It doesn't give. No, did I trade Monday? No, I did trade Monday. No, did I trade Monday? No, I traded yesterday. Sorry, that was the first. What am I doing? My memory is losing. I didn't trade Monday and I didn't trade today, but I traded Tuesday, and I'm going to trade tomorrow morning potentially before I leave for Birmingham, and then I'm going to trade obviously Friday as usual. But because those 2 days are missed, there could be losses on those days that I didn't document, which is the problem. Which, to be fair, I could go back and backtest, but the problem with live trading is that I need to see how I react to things live. That's what gives me the confidence myself. Because often what happens in backtesting, that candles change, structure changes, and it's not an accurate representation. And I can easily already see what happened the previous day just from looking at this. So it sort of would, unconsciously it would already affect my decision making. So that's why I'm not a massive fan of backtesting. I prefer live testing. Anyway, as I mentioned, I'm going to continue testing this for the rest of the month. Continue trying to perfect this as much as possible, purely because I am enjoying the process. Yeah, I have to admit, trading has been a little bit boring, so it's quite nice to be working with something and working on something that's actually working. Because I've been trying to test like new things. I've been trying to test so many different things and how to read price from the 1 minute time frame, in terms of how to read it in a way that we can trade the seconds time frame without having the seconds time frame. But unfortunately, I can't make that possible. I tried it so many different ways. I just can't make it possible. But unless some of you guys have ideas, but I mean, go ahead and keep trying and testing. But at least, you know, I've got something exciting to be working on, which is quite nice. But as you know, I'm going to keep you guys all informed about the next procedures using this. But for now, I will leave you guys be. I hope you found this video useful, and I will speak to you all in Discord and in the next breakdown video.